Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandnani, and today we're going to be discussing an IPO. Vikram Solar is what we're going to discuss on KYC today. Let me start off with what I want to know, as we always do. This is, of course, an EPC and a solar module manufacturer. And what I'd want to know is how realizations are trending. There has been pressure over the last couple of years when it comes to realization. FY24 realizations have fallen by nearly half. And FY25, we've seen a flattish kind of a move on realizations, and which is creating some bit of pressure where margins is concerned. So therefore, I'd want to understand whether this is where realizations can sustain. Mind you, the other piece is also there's going to be oversupply in the domestic market, and that's point number 6 for me. But and I'll come maybe to that. Let me start with the second piece now. There's been some shares which have been pledged, and post IPO, I'd want to know whether there would be any change to this. And by some shares, I mean nearly 50% of the shares held by promoters are pledged due to working capital requirements and due to debt taken on by the company. Whether that changes at all is what I'd want to know. The third piece is working capital increases. This has impacted cash flow in FY24, FY25. I'd want to know whether some bit of that can unwind, or is that part of the normal cycle that the company expects in terms of the cash flow getting blocked in working capital requirements. The fourth piece is with regard to possible expansion plans, and they are of course doing a 1500 crore a fresh issue, which is likely to be used for capex plans, phase 1 and phase 2 of their capex plan to do to ramp up on their facilities. Whether this will when does this capacity come on stream, so the timing, the revenue potential, and how much is the capacity addition going to be. I'll ask all of these things and get a perspective around that. There is definitely customer concentration risks. In fact, top 5 customers contribute nearly 80% of the top line. The top 10 contribute nearly 90% of the top line. Whether there's a plan to de-risk this in any fashion is also what I'd want to know. Also, there's oversupply in the domestic market. There's plenty of capex happening in this space domestically. There is some bit of insulation when it comes to dumping from abroad by duties imposed, anti-dumping duties imposed. But nonetheless, the oversupply in the domestic market is possibly the big overhang, along with big players coming into this space. So all of that could also possibly be a risk, and I'd want to know whether how real that risk is and how they view it. All of this, Varsha, anything to add to any of these points?
No, I think overall we have covered everything. Also ALMM list, that is approved list, but we need to ask the management about that.
Yeah.
That as well.
You want to explain that?
I mean, it's will be flowing out with about.
Let's
section.
do that. So why don't you start off with the about the company section?
Yeah. So what Vikram Solar does is they manufacture PV modules. Now, what are PV modules? The primary function is to convert sunlight directly into electricity. That's a phenomenon which is called photovoltaic effect in a simple language. Also, they provide EPC and operating and maintenance services also. Talking about the business verticals, let's start with solar PV modules. They manufacture and exports the solar PV modules. Onto the brands, you have Hypersol, Paradia, Somera are some of their brands when it comes to solar PV modules. The other segment that I spoke about was they provide EPC services as well. So these are basically the 2 business segment that the company has. Onto the geographical split, the domestic forms almost 99% of the overall revenue, and rest is from export, that is 1%, and mainly from US, I would say. On the EPC, they execute EPC projects for solar plants, have 200 plus projects across 19 states and 2 union territories. Also, the cumulative capacity, when it comes to EPC is at almost 1.41 gigawatt as of March 25, and they use their own. So for EPC, you also need solar modules. So they use their own manufactured PV modules in its EPC projects. Talking about the production facility. Their manufacturing facilities are located in Kolkata, West Bengal and in Chennai, and the installed capacity is at 4.5 gigawatt. But you know, the interesting point here is they are increasing their capacity. So they are undertaking major brownfield and greenfield projects. On the solar PV module capacity, the target is at 15.50 gigawatt. That is huge, you know, by FY26 and 20 gigawatt by FY27. Onto solar cell manufacturing, you know, a lot of companies are going into solar cell manufacturing that will help into a backward integration plans that they have. So they are setting up 12 gigawatt of capacity in Tamil Nadu by FY27, and also now battery energy storage, which we call BESS or BESS, is the current hot topic when it comes to renewable assets. So they have greenfield project in Tamil Nadu which will starting at 1 gigawatt hours. So and also this will be expanded to 5 gigawatt by FY27. So huge capacity expansion when it comes to 26 and 27 as well. So currently what's happening in this industry, Harsh, is you look at any company, they are increasing their capacity considering the target of India, that is 500 gigawatt by 2030. So to meet that targets, lot of companies, you take SME companies, you take small cap companies or even bigger companies, they are expanding a lot. And when it comes to solar cell also, they are expanding the capacity. So overall, this is what is happening in the industry where the expansion is considered.
One piece of caution, when you have such kind of exponential growth, demand has to live up to that growth for the foreseeable future, because you're putting up capacity upfront and then you're building out. The key question here is, will this become as commoditized as just absolutely any other metal or commodity? Will there be a larger linkage only from a demand supply perspective? Because that has been the key driver with regard to realizations. And if realizations therefore don't do as well, what is the impact of that on your entire financial statement, from income statement to cash flow especially? And of course, the debt that you take on as a result of the sharp expansion that you do. Right. So all of that needs to be kept in mind. And
also, Harsh, you were just speaking about ALMM, right? So ALMM is nothing but, it's an approved list. So wherein if approved list of modules and manufacturers. So in a simple point, so we all know that China has been dumping a lot. Now what we have done is to secure our domestic companies. We have come, or they're going to come up with an approved list of module companies wherein we have to buy from that list only. So basically this all has been done to pump up the domestic production, and that is the reason so I would say every renewable companies, when it comes to PV modules and solar cells, they are dependent on ALMM. So why the surge when it comes to Worry Energies, or you take any PV module for that matter? So they are surging, or the recent surge that we saw was because of the ALMM. Because now that will benefit these companies, because all the EPC companies, and they'll buy from that approved list of companies. And if Worry is into approved list, that's beneficial for them.
Correct. So of course it benefits a few. Some of these regulatory hurdles that you create benefits the few which comply with the regulation and which make it to these lists. Now I want to talk a little bit also about the shift that this company has made in terms of top line. Solar PV module manufacturing was, I believe, over 80% of the top line just a few years back. Currently, that sits at less than 40%. A larger chunk of the top line comes from EPC. So that's the other shift that has happened in a big fashion, Varsha, with regard to where a Vikram Solar is concerned. So you've seen a big shift with regard to how the revenue mix has changed. Now let's talk about the metrics that we will talk about. And of course, this is an IPO. First time we've taken an IPO on KYC. So let me refresh the metrics. Income statement, balance sheet, cash flow, return ratios. We'll stick to the same ones over there. Shareholding, we will look at it pre and post and try and analyze that better. Street coverage, risks and valuations. We'll look at all of these Street coverage, of course, there's no street cred in this one because it's not yet listed, but the indications seem to be that it likely could be a positive listing based on the grey market premium that we're seeing currently. But we're not using that for street cred purposes. That's just for your knowledge. Let me start off though with the income statement. Let me allow Varsha to start with the income statement.
Yeah, so commenting on income statement, just look at the numbers, huge growth in numbers. If I were to talk about 3-year CAGR when it comes to revenue, so 3-year CAGR is 26%. But the main focus point here is, if you see, the net profit has grown at a 62% CAGR level. Now, one of the reasons is that look at the margins. Margins have improved drastically, and still, the interesting part over here is still they have scope to increase that margin, because you see Waaree Energies, you see Premier Energies, over there the margins are higher than what Vikram Solar does, and so that leaves an opportunity for the company, to increase their margins, and because of the increase in margin, we are seeing good uptick when it comes to net profit. So yes, and the company's order book, now why the financials are looking good? Because of the increase in the order book, and a strong order book, if you see, provides visibility when it comes to financials or revenue. So good, we would give a thumbs up when it comes to income statement, good financials.
Yeah, good strong growth. Let's talk about the balance sheet, and it's not looking too bad on that front either. You're seeing a decent amount of equity and reserves sitting there. But more importantly, it's going to be the post-IPO balance sheet that you look for, because there'll be a huge change to that equity and reserves and surplus, which you are seeing at this point. You look at the net debt, not too much of a concern, at least at this point. Also, the large part of the capex is going to get funded by the IPO proceeds, so that's the other piece. Largely, debt currently does not seem to be a concern from a net debt perspective. So we've given this one a thumbs up as well. No worries with regard to the balance sheet, at least for the moment. Varsha, cash flow.
Yeah, so overall we have given a neutral rating when it comes to cash flow, considering, as Harsh was speaking about, the working capital stress that the company has, and one of the reasons why they've gone for IPO also, they're going to use that proceeds for working capital. But overall, if you see, cash flow from operations have increased though from 195 crore to 299 crore, but the net cash flow that you're seeing is negative 17 crore in 23 to positive 30 crore in FY25. So one of the reasons is, of course, the working capital pressure that the company has seen. So overall, a neutral rating when it comes to cash flow.
You want to take return ratios as well?
Yeah, sure. So when you have good income statement, Harsh, return ratios are bound to follow the financials. So over here, if you see, ROC has improved from 12.7% to 24%, not bad. Even ROE, if you see, have improved from 4% to 16.57%. Now, so the whole crux is the margin picture, the margin trajectory. That has increased a lot, and because of that, if you see, though your revenue has not, revenue has improved at 26-27% level, but because of the increase in margin, there is a boost up seen, when it comes to profitability, and of course the return ratios has followed those numbers.
Yeah, so decent set of numbers. Now let me look at the shareholding, and I'll explain this a little bit in a nuanced fashion. You have currently pre-issue, which is pre-IPO, you have around 78% promoter holding, 22% public holding. 30% promoter holding was pledged. Some of that will likely, hopefully, unwind, and we'll ask that question to promoters. Post-issue as well, the holding is very, very healthy, but just that pledge could well be something which may concern shareholders a little bit, and that's why we've been cautious and given this a neutral. We want to see whether that unwinds at all. So that's with regard to the shareholding. We'd also, let me quickly cover street coverage. Now, there are around 15 to 16 brokers and analysts covering this, but we've picked the top 10 to 11. And out of that, 10 have an apply and 1 have a neutral. So this one also is a thumbs up with regard to where, how the street is viewing the IPO itself. So that's broadly on those two parameters. I'll also talk about risk before I throw it back to Varsha for valuations. Customer concentration, we did speak about this. 78% comes from top 5 customers, 89% from top 10. Module prices in global markets have been impacted negatively. The success depends on the ability to build the new manufacturing facility in Tamil Nadu. Any kind of problem there could well be a huge risk with regard to growth going forward for a Vikram Solar. And there's export concentration to the US. A lot of these are already part of the RHP. I've picked it up straight from there to a large extent. But of course, realizations is the other piece, and what I want to know are also some of the risks are covered there. So, of course, are the risks evenly balanced? Maybe not. It's surely something which looks slightly on the risky side given all of these factors. But Varsha, valuations, how do they look?
Yeah, so Harsh, so compare it with Premier Energies and Worry Energies. And on FY25 basis, the P is very high. So it's coming at around 85x, 85 times. And if you see Premier and Worry, Premier is at what, 48 times, while Worry Energies is at 46 times. So one of the reasons why I see the premium given to Vikram Solar is, of course, the expansion, that they are going into, huge expansion that the company is doing, and also there's still a hope of improvement in margins. Because of also they are going into backward integration of cells which they'll be using for their modules and all. So there's some scope of margin expansion, and I think Street is excited when it comes to expansion in margin, because that will automatically add up to your bottom line.
And the fact that they're putting up so much capacity.
Exactly.
So I don't think any of their peers are doing that. Not this extent. Not going from 4.5 gigs to like 20 gigs in maybe 2 to 3 financial years. That's not something that we're seeing either of those do. So, so a little bit of all of that is what is really built into the price to earnings. But certainly when you compare it on a one-to-one basis and you exclude the possibilities which lie because of the huge expansion that is likely to come, this one looks on the expensive side. So that's understandable. That's all of the rating parameters summed up for you in a couple of screens, and that gives you a rating which is not too bad of 5 on 8 on our KYC rating. Let's go across. We have the management joining us. We have Gyanesh Chaudhary, who's the Chairman Managing Director of Vikram Solar, joining us. Great having you, Mr. Chaudhary. Let me try and understand first off, sir, with regard to PVC, PV, the realizations coming through on photovoltaic cells. What is the trend that you're seeing, and are you seeing a possibility of an oversupply in the domestic market? How are you hedging against it?
First of all, thanks Harsh and Varsha for having me.
Great having you, sir.
I think this industry is at the cusp of phenomenal transformation. Energy, is the most important consumable right after roti, kapda or makan. And for this reason, the Indian government has taken these large initiatives spearheaded by Honorable Prime Minister. So I think within renewables, solar is the largest story because it's ubiquitous. It is easily accessible. Now with the costs coming down, it becomes a phenomenal opportunity to be energy independent, Atmanirbhar, and also look at how we can look at energy security, which becomes a very important agenda going forward, looking at the whole geopolitical situation. As far as Vikram Solar is concerned, we are in this for the long haul. We are 2 decades into this, one of the pioneers in the sector, with huge capacities coming up now to cater to this phenomenal demand.
Right. Mr. Chaudhary, hi, Varsha this side, welcome to NDTV Profit. Now, my question is, well, if you see the revenue growth has been strong, but what about margins? You've seen good uptick in margins also in last 2 years. Is there a scope of further improvement in margins considering the margins of your peers as well?
Thanks for the question, Varsha. You would understand that I will refrain from any forward-looking statements. However, what I can tell you is that looking at the growth and the additional capacity that we are setting up in this year, as well as the next fiscal, the cell plant coming up, we look at healthy growth in the margins depending on how we are able to execute the project. That becomes the key. And I was watching that you asked the question on execution risk. As far as Vikram is concerned, we have deployed the best technology providers, service providers, with the likes of L&T, with the likes of all the large cell manufacturing equipment suppliers to help us execute this project in record time. And I think that will drive our margins to a new high.
Understood, Mr. Chaudhary. Okay, so let's, of course, take it with whatever you're saying, that you will be able to execute this, you will be able to set up shop and expand capacity FY26, FY27. What is the revenue potential coming from these two? I'm not asking you for guidance. I'm just trying to understand what the revenue potential of setting up both of these looks like at the end of FY26 and maybe at the end of FY28 once everything's set up.
Harsh, again, I will refrain from giving any specific numbers, but what I can tell you is that the government of India has bet big on domestic manufacturers. With Varsha talking about ALMM, there is an ALMM list 2, which is due to be implemented from next year onwards. Now, what is this ALMM list 2? It mandates not just domestic modules coming in from domestic sources, but also the cells that go into it, which has to be domestic. Now, currently, if you see, India has a very small capacity of cell manufacturing, out of which, if you see the operating capacity, it becomes further lower. Now, to mitigate this and ensure that we are able to meet this huge demand, cell manufacturers have to come into play, and Vikram Solar is betting big with 12 gigawatt of cell capacity. Now, this will significantly enhance our overall revenue as well as profitability in the years to come.
So what's the outlook with regard to the shares which the promoter group has pledged? Would some of that debt be repaid? Would the pledge therefore get reversed? Or is that expected to stand, and for how long?
The pledge is only to our banks, and there is no other pledge, then there is no other leverage that the company has. As you can see that our debt portfolio is next to nil. And the reason why this is that we have had healthy cash flows in the last years, and we continue to build those healthy cash flows. We will be raising new debt, and we've already mentioned that in the DRHP through IREDA. And this is for the new capex that we are undertaking, the part of the equity proceeds from IPO, which are going into that.
How much would you be raising, sir? And what is the percentage of pledge post-issue in terms of you hold 63%, you along with the promoter group? So how much of that would typically be pledged on a post-issue basis?
I would not be able to give you those numbers because I don't have them.
Okay,
However, as I again say that the pledge is only to the public sector banks, which is a standard operating procedure.
Mr. Chaudhary, my last question is, beyond module and EPC services, you're also venturing into BESS, that is battery storage energy services, storage system. Now, my question is, what are your long-term aspiration, when it comes to battery energy storage system?
Varsha, great question. I think I am so excited about the battery energy storage and the advent of that in the ecosystem of renewables, because so far what we have seen is solar is, rise in the morning and sleep at night kind of a scenario where all you generate, you have to consume during the daylight hours. Now with battery energy storage, what we have seen globally, whether it is Germany or China, now in India, that there is a phenomenal scope to use solar energy throughout the day, 24 hours. And so far, the technology has been quite diverse with respect to, the chemistry and other things. But what we have seen recently is that the current technology which has taken precedence is going to take center stage, and we will be also working towards building those manufacturing plants and also coming up with new products and solutions.
Okay, Mr. Chaudhary, last question is with regard to the huge ramp up in capacity, and maybe this is not a risk at all, but it's something that I'd be curious to understand. Say we reach 500 gigs by FY30, which is the goal of the government. You've got this very, very large capacity. Now we all well know that the typical life of a PV cell is nearly 25 years. So while the O&M part of the business will likely continue to do well, what happens to the facility that you've set up? Because there will be a cap with regard to growth there. Power demand in India isn't expanding at a very, very rapid pace, right? We're growing at high single digit.
Harsh, there are two aspects to this. One is where is the demand going to, and the second, whether we will be able to continuously meet our capacity utilization. Am I right? Yes. Okay.
Yes.
So as far as the demand goes, we are sitting at the cusp of a huge demand growth, and not just in India, but globally also. India is sitting at the third lead in the leaderboard. We are number 3 in terms of global deployment of solar, US being number 2, and China, of course, being number 1. But the way India is expanding and growing in its capacity, we've seen additional new areas of solar deployment like green hydrogen, EV, and other decentralized solar applications coming into play. So I don't see any problem with respect to demand. In fact, there's going to be effectively a great deal of demand for good quality, high efficiency solar panels, which Vikram does 100%.
Got it.
Let's talk about global demand supply. The demand is surging phenomenally throughout Europe, Australia, Middle East, as well as US. We are getting a little affected by this geopolitical situation, but what we see as Vikram Solar is the opportunity in this. There is a shift away from China with respect to supply chain. There is a policy positivity, and there is an entire demand surge. So all three together will lead to phenomenal deployment.
Got it. Thank you so much, Mr. Chaudhary, for coming in, speaking with us as candidly as you can, and giving us that perspective. Of course, there are some issues, of course, with regard to disclosures that one can't make as a company which is going into IPO, and we fully understand that. Thank you so much, sir, though, for coming in. From Varsha, myself, everyone who's put the show together, viewers, thank you so much for watching.